What is up, everyone? And we are live. All right. A lot has happened with the Trump and the tariffs and everything. So there's a lot to cover. Obviously, we'll be discussing all the trades. I'll give everybody a second to populate the live stream. And all right, let's see. There we go. Let people join in. Give it a second. I don't want to repeat myself 20 billion times, so I'll just let everybody get in there. At their trading desks. All right. There we go. All right. Hey, good morning, Jennifer. Legacy. Darun. All right. Give it a few more minutes. And we'll start because a lot of shit is going on. Don't rush it. You still have, just for those who are now, I am very small position long in NASDAQ, but I'll explain all of it as well. You can follow me, don't follow me, up to you. 1 second, I gotta refresh this, some new version. There we go. All right. That works. All right, everyone. Welcome. This was again a very interesting open with Sunday gap down, a massive gap down this time everywhere on S&Ps, on Dow and Nas. These are futures markets. You can look at CFDs. Same shit. Okay. So massive gap downs like we had last week, except as I was explaining to you why I was long all of last week. We caught most 80% of this move was we caught it. I closed my longs around the retest level, and obviously we went a little higher and then rolled over into the close. Friday afternoon we rolled over, as you can see, we were pumping. And then first of all, let's discuss what happened last Friday. Why did I closed it here? Because this was the safe place to close. And once the gap is done, it usually rolls over. Plus, I explained to you that you have to understand which day of the week it is. At certain days of the week, people do certain actions. So on Fridays, people who were like me or like you who were following me and big guys who were trading this, institutional players, that bought the market, they took profit because, again, on weekend you have the uncertainty. And if they wouldn't have taken the profit here, or I wouldn't have taken profit here, I would be down here where I pretty much entered last week, okay? So that's why smart people avoid weekend risk. And this is a perfect example of weekend risk. Obviously, this is just new presidency, and this is complete 180 of what has been happening for the last 4 years. And Trump is taking no prisoners. He's really cutting heads off everywhere. So from tariffs on Mexico, Canada, to going to Panama Canal and just telling them, hand it over or we're going to take it over. Go fuck yourselves. That's quite a statement. There's no more pussyfooting about. He's literally saying China controls Panama Canal via its puppets. Go fuck yourselves. It's our shit, our territory, and that's that. What are you going to do? What is Panama going to do? Put 5 soldiers on the ground and get annihilated in 2.5 seconds? No, they're just going to hand it over, right? So anyway, but all of this that's going on is obviously providing a lot of volatility and weekend uncertainty. So the weekend risk, that's why day trading right now is perfect, because you essentially you don't want to swing trade in when it's crazy like this. This is a time where you should be nimble. You should be in and out. I've taken like 5 trades. There's 4 trades in NASDAQ. We're taking trades in gold as well last week. And right now we have this gap that probably is going to get filled again. So the big question is, again, this is high risk territory, but the big question is, will this gap get, one second, will this gap get filled and then roll over, or we might roll over here. Why? Well, because there are a lot of stop losses longs here. So do this and then close it and then roll over. Okay. Or another third scenario. This is the big swing low, swing high, and this, right? So if we close this gap, consolidate a little bit, and then take out this high, then we've essentially made a high, a low, and a higher. So a low, a high, a lower high, and a higher high. Okay. So this is a switch. This will be a switch into the on a 4-hour time frame. This is going to be super bullish. Okay. So I don't know which scenario is going to play out. My job as a trader is to react. I'm not a fucking analyst. Okay. You're not an analyst. Analysts, they get paid a salary and they just spew shit with their whatever the fuck, that's why in banks or hedge funds everywhere they have analysts and then they have traders, and traders never listen to the analysts. Analysts just produce reports for people to read, but it's toilet paper. Okay. Some of them make sense, some of them don't make sense, but when you don't have, you put your neck on the line, basically with trading, it's all just pontificating and this. It's mental masturbation. All right. So your job is to react. And how do you react? Well, you have to build out scenarios of what are the well, in this case, 3 big scenarios that I see, and this is how I'm going to trade it. So for now, the highest probability for me is this gap close again, like it happened last week. That we might, the only pitfall here is if you're gonna go long, you have to be super small, because market makers are evil. Not evil, they're efficient. And they can take out this low, this low right here, just to pop the stops, grab the liquidity that is below these levels, okay? You don't need to have a heat map like I do to see that they're probably, let's see what level it is, just for shits and giggles. 1 second, let me just remove this. All right, let's go in NQ. What is this? This is 758, 2758. Let's see if we can even get that low. 20. Yeah, this is all. Yeah, this is it's so far away for now that the book map is not even showing, because this is more for intraday trading type of deal. But trust me, there is a whole pool of order. Once if the will start dwindling down, you'll see that there's a whole book of there's a whole cluster of orders, big chunk of orders sitting right below. Because why? Well, that's because where everybody puts their stop loss. It doesn't take a fucking genius to figure out where the stop losses are. We all read the same books, the same technical analysis, the same circle jerk bullshit, right? Everybody knows stop losses are here and here. Okay, that's it. And right now we are consolidating inside this massive. Well, we can say triangle now. So long term, or if you want, you can go like this. Doesn't matter. But we are consolidating essentially, as you can see. Let's go 8 hours. So when you're within the triangle, it's just erratic behavior. What the best thing to do around the triangles is obviously trade at the extremes, like a range, okay? Except it's not a sideways range, it's a contracting volume range, all right? Followed by a big explosive expansion, all right? So that's why you have to trade small, because you don't know which side is gonna go, which side is gonna go boom. But once it goes boom, you better take your stop loss or cut your trade off, let that fish go if you're on the wrong side, because that sucker can run. Okay, so let's take a look-see. By the way, for the Bitcoin crowd and gold crowd, gold sold off on the open. I took profit here. I shorted. Where did I short? I was actually short cash market. I shorted right here. Not the best range stop. So I had to go sit through some pain on Friday, but I knew profit taking will ensue. And obviously then it went my way, and I closed exactly on the 618 of this leg up, okay? It was a previous area of interest. This was marked last week before this low even was here, right? You can go in the videos. You'll see why I marked this specific area. It went exactly to this fucking area, and then it reversed. So I shorted. I closed my short here. On a 4-hour time frame, it gave you a chance to go long. I didn't go long. Why? Well, because I went to sleep. This was my already. This was these two candles were around 10 p.m. on my time, and I just went to bed. I didn't want to babysit throughout all of night, and then I wouldn't be able to even do this wonderful webinar because I would have been mad, tired, and cranky. All right, so I didn't babysit through this. I didn't want to babysit it because I already made money. I was happy, and I went to sleep peacefully, knowing that another opportunity will present itself. Trust me. All right. So this is the area that was of interest. Now I've explained to you over and over and over and over and over again the breakout, retest, continuation, breakout, retest, continuation. Go back to my lives again, and then you'll see every single time I talk about the breakout, retest, continuation. Every single time, you know. And again, this is breakout, retest, continuation. Again, from the area of interest. It didn't get all the way down here, but this was the big area. Okay, this was marked way before. Okay, so this is why I closed my shorts in this area right here. So let's take a look at the gold futures. Gold futures, all-time high, previous all-time high. Retest, breakout, retest exactly to the motherfucking point, to the pip, and continuation. How many times, like if you just rewatch all of last week and how I was making money last week, you'll rewatch that 10 times. That's all you need. That's all you need that's all you need to learn how to trade. Okay, the breakout, retest, continuation, breakout, retest, continuation, or and all the other little tidbits. All right. If you're that type, again, sometimes you have range trading, but then I stay out. If that happens, and obviously there are different tools. But even if you just learn this one particular entry method, you don't need anything else. You'll make money. All right. Then you can add mean reversion, blah blah blah, like I was talking about on Friday with the gold and everything else. The mean reversion trades and how to do them, etc., etc., etc. But for now, breakout, retest, continuation is every single fucking time I'm showing you all this, and it happens. All right. So what's next is the the Bitcoin. So gold, as you can see, we went down, and on the safe haven, because when volatility goes up due to world uncertainty, you essentially what you have is well, when you have uncertainty in the markets, you have safe haven type of plays happen, right? So what are safe haven assets? People where they park money when shit happens. Gold is one of them, right? Throughout the centuries in history and thousands of years, gold has been around. It's always been a currency. Store value, and obviously when shit hits the fan, it's one of those asset classes where it's a safe haven type of asset class where people park their money during the time of uncertainty, which is not Bitcoin. Bitcoin sold off just like NASDAQ. It's just a tech play. All of the Bitcoin bullshit is just a tech play, okay? And last week when we were here, I was explaining to you how to trade this range. This is not a breakout retest. This is a range plays here. Why? Well, I explained to you. Look how it likes to trade. It likes to do the huge, massive breakouts. Then it does the retest right here, and then it breaks out again. So very highly likely that last week, like I told you, when we were here, I said buy the dips and sell the rips into the. This is going to be ranging for a while, just like it did here. It took 6 months. This shit took 6 months. We're 2 months in. I think we will range for another month or two very easily. Okay. So if you're going to be trading, sell extremes, buy the dips into the zone. So maybe even, and this is exactly what happened. Obviously, buyers came in whenever we are. So this is a range play type of deal. But the interesting part is that Bitcoin bros all sold their shit, and gold is the one that's going up. So because again, a lot of people were saying Bitcoin is digital gold and all that bullshit. It's not digital gold. It's just a fucking FOMO tech nonsense. All right. It's not. I'm not saying you won't be able to make money on it. Trust me, you can, and I have, and you will. But it's not gold. Okay, it's not digital gold. It's dog shit in reality. Because once the quantum computers are becoming a thing, it will take no time to break the current encryption patterns that are established and were established 20, 30 years ago, you know, based on the computer technology of that era. And that's where Bitcoin started actually as a CA project back in the 90s. There are papers on it, et cetera, et cetera, et cetera, okay? But regardless of that, the SHA 256 encryption and all those standards, they will be not like peanut butter, well, not peanut butter. They'll be just like butter, like a knife through butter, with the quantum computers in the next decade. So it's very questionable what's going to happen. Obviously, to Bitcoin, as you know, Michael Saylor. By the way, I'm going on a tangent. Michael Saylor, the one who's buying all the Bitcoin and et cetera, et cetera, et cetera, in his MicroStrategy fund, he did the same fucking thing in the 90s with when the tech bubble started, and that company went to shit. Obviously, he just leveraged it up and rode the wave until he lost a shit ton of money. So same thing might be happening here. I don't know. Do I own Bitcoin? Yes, of course I own Bitcoin, but I'm not gonna be sitting here and pretending that this is digital gold. It's not. It's just a fucking NASDAQ pure tech play. That's all it is. All right. Anyway, the only digital gold is gold. All right, so gold is about to take out the all-time highs again. This is the all-time highs. I'm just gonna remove useless information at this point. I can remove this. Well, I can leave it for now, but let's see. This is the new all-time high. I'm gonna mark it on my chart so I know. This is, I don't give a shit about this anymore. So now we have a clean. By the way, the more shit you have on your chart, the harder it is to see what the hell is going on. So we all start with the, like we have 20 billion different indicators, and that's okay, because that's how you start. You start with you throw everything on your chart in the beginning, and then after a while you start removing shit that doesn't work. It doesn't stick. Okay. And that's a normal process, so don't be afraid to, just because you have a lot of stuff on your chart, you have to go through the process of finding out what works, what doesn't work, and refining your trading into the system that works for you. All right. So, but the cleaner the chart, the more money you will make, rather than having 20 different billion indicators, up, down, left, right, sideways, up your ass, whatever. All that nonsense is, nonsense, because it's going to give you conflicting signals. And you're going to be sitting there with drool coming out of your mouth because you don't know whether it's going to go up or down or sideways or whatever. So it's just going to confuse the shit out of you. So the sign of a mature trader is when you just have clean chart, usually, rather than having a bunch of shit on it that, just shit. Anyway, but everybody goes through that process. They have 20 different indicators. They have oscillators. They have moving averages. They have whatever the hell. All right. But remember, the major tenets are very simple. Mark daily levels, huge daily levels. All right. And that will that alone will stop you or save you a lot of agony and headache and heartache. So that's probably the most important things you should do. Mark major levels on daily time frames, because daily time frames is where institutional traders play. They don't play on 1 hour. They're high frequency, blah, blah, blah. But I'm talking about massive institutional pension funds, investment funds, hedge funds. Usually just because they operate with so much volume. You simply, you cannot put a $1 billion order or $500 million order on a 1 minute chart. There's no liquidity on there. So they usually stick to the daily chart for their at least analyzing what the hell is happening and pinpointing to the major areas of interest themselves. Okay, so this is why you get these head and shoulders, reversal, retest, down, retest again, down, whatever, breakout, retest, continuation. You have these areas of, you call them support, resistance, whatever you want to call them, in any or order blocks or schmorter blocks. It doesn't matter. It's all these systems just describe, or Wyckoff or Elliott waves, or doesn't matter. It's just language that describes same phenomena. But being on daily charts, marking major daily levels, is paramount. Doesn't matter what system you use, you have to know where daily levels are. Okay, all right. Gold. So gold is literally, I would be very, very surprised if we don't take out these highs, honestly, because look how juicy, first of all, it is. You have obviously the previous all-time high. We popped the stops with this candle right here, right? We took the stops, put it in reversal candle, and then off we went to retest the previous all-time high right here, right? Which is this peak right here, okay? And now we're going up. So we've essentially we've done the retest. The dip is being bought. The only problem is, see how before taking out this previous all-time high, we had this little spring effect where the spring gets when you take a spring and you squeeze it, you store the energy, and then you let it go, the energy explodes. That's what happens here. It's nice to see consolidation prior to an explosive move up. All right, and I think that's what's going to happen, should happen here, because where are all the stop losses now? Well, they're here. They're above these levels, right? Above, you have essentially 3 equal highs, more or less, for that are prime. There's a bunch of orders sitting right here because a lot of people trying to short the when it approaches all-time high, because this is how ranges get developed, right? Ranges get developed because there's going to be a bunch of orders sitting right here trying to play this, okay? How many of you tried to short all-time highs last week, right? So, and we did a whole series on explaining what was that all about, and et cetera, et cetera. Anyway, I don't want to repeat myself 20 billion times, but yeah. So right now, as we approach this level, I would, if I want to see the reaction. I basically, you can't buy it right now. Why? Well, because this is the room you have, while the stop loss should be right here. You know what I mean? So risk to reward is definitely not there. It also, you have to look how the price develops, how the price gets to a certain level. This is just one straight leg up. All right. So buyers are going to run out of steam when they approach heavy seller volume that is right here. All the buyers, they had to, imagine you had to start running right here, right? You already ran a fucking marathon, and then you need as much energy as you've put here to push this fucking thing out to all-time highs. So that's why it usually as a runner, you take a breather, and then boom, you go for another explosive move. Okay, you absorb the sell orders, and then you do the explosive move up. So we'll see what happens. Like I said, on gold, intraday. If I would be interested in trading, I would be trading in this area like this. Okay, so this is the simple order block play, ICT, SMC, whatever you want to call it. That could be a possible trade. All right. Intraday, but again, ideally, this is, let me mark this. Ideally, what I'd want to see is, again, a repeat of, I don't remember what happened last week. I think I stayed out of this move already, but I shorted, yeah, so we stayed out, I shorted, went a little against me, and then obviously I caught all of this. All of this move down, I caught. All right. So I didn't catch this move up. I should have, but like I explained to you, I was sleeping. Right. So for me, I didn't buy the retest. So, but what I do want to see is the same again. It's what? How do you make money in trading markets? Very simple. You you take advantage of certain patterns. What's the pattern? Breakout, retest, continuation. Breakout right here. This was the previous all-time high. Right. This is the top. Little consolidation prior to taking out the all-time high. Explosive move. I didn't catch it. I caught the reversal. Again, retest, continuation. So how do I do this now? The ideal scenario would be, again, 1 second. I want this price to consolidate here, breakout, retest. Like a retard, you're going to buy it here for another leg up. Because why? Well, the trend is up. The trend is up. And with all the fundamentals supporting higher volatility and Trump undoing a lot of policies and doing very unorthodox approaches that we haven't seen in 20, 30 years, essentially, just shooting everything in sight, this most fundamentally speaking, gold has the same, nothing has changed. So as long as Trump is doing what he's doing, and as long as the markets keep trading the way the trend is up, so that basically you have confluence of fundamentals and technicals aligning. You have a trend up in technicals, you have fundamentals, reason behind it. And so why are you going to be pissing against it? It's stupid. Just because it makes all-time high, you can make all-time highs every fucking week, okay? For the next 2 months. So why... just because we have a little peekaboo, don't start selling here, because you can end up, people were trying to be slick and started selling here, 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 here. I was explaining to you all of last week why you shouldn't be selling any of this, not to piss against the wind, right? I'm sure a lot of people got, and the reason why this rally took so long is because it's reverse traders thinking, oh, the price is too far. Let's sell it. Let's sell it. Let's sell it. And then, and then they all get stopped out, and they get, and this is them getting stopped out constantly, because the prices just keeps going and going and going and going. So don't be an idiot here, okay? Just because you see a peekaboo, can it reverse and do this? Sure, but you can also do this. And then where's it's pardon me, and it's a Monday. So it can keep going for the whole week. At least this was Thursday, Friday action, okay? So that's one thing. But on if you're caught here, you start selling here at the peekaboo, essentially here. But on the Monday, you have 3 more days of potential rally you have to sit through, which will, unfortunately for you, well, you just don't have deep enough pockets to withstand any of this shit. Okay, so just why piss against the wind? Why fight it when what? We're gonna have a breakout retest. You buy here for another leg up. That's it. The market is showing you what type of market it is. It's a trending market. So just buy the fucking dip into the direction of the trend, and that's it. You don't need to be a goddamn genius to do anything. Just keep it simple, stupid. The KISS principle. All right. So so that's gold. I'm not gonna be shorting here unless I see some kind of super reversal pattern. With we pop the top, we have a reverse like this one right here. Okay. If I see this, then with the wick candle reversal on a 4-hour, 1 hour, or 4-hour basis, maybe I'll consider it, and then we can probably think that it's going to be establishing a range. But for now, so my two tops, my first scenario is breakout retest continuation. My second scenario is reversal pattern, but it has to be for me to engage into it, because again, this was Friday, so this was a day where people take profit after a whole week of rallying. Okay, on a Friday, closer to the noon already, right? You essentially have people just fucking off into the weekend. So that's why this happened. Here again, it's a Monday. It can be a fake out and keep going and going and going against you. So my first scenario is breakout retest continuation. My second scenario, reversal, but it has to be perfect. All right. If we and another one, obviously, I'll be looking for buying opportunities maybe here and here around these levels. Okay, but for now, that we're just watching and sitting on our hands. Let's see what the cash market is doing. So absolutely directionless. All right, this is the hourly candles. Since London, this was London Open right here, this little pump, and we've been consolidating directionless pretty much ever since. Let's see, cash market, same shit, NASDAQ, you know, S&P. But these gaps are there, and they probably will be closed sometime this week. This is cash market, see. Oh, so interesting. So this is cash market. So you got a high, low, a lower high, and a lower low. So this is actually not looking good. This is quite bearish. And NASDAQ high, low, high. So NASDAQ is a little better looking because you had a major low right here, major high, a higher low, and we're trying. If we take out these highs, we're gonna have a higher high. So, all right. Plus a head and shoulders pattern on a 4-hour basis right here. See, shoulder, head, and we're just doing a right shoulder right now before another possible leg up, okay, on NASDAQ. Anyway, so let's take a look at the VIX. Okay, VIX is a good indicator. Right now, we see that the volatility, the fear indicator, basically showing us that the it's subsiding, which is good. That means it's bullish for stocks. I think we're gonna rally. Okay, so we are long, we are in profit, and if you really want to be slick, you can just put your stop at break even right now, and you have a risk-free trade. If it runs, it runs. If it doesn't, well, so be it. Okay, but yeah, we are long the NASDAQ as to play the gap close again. And I think the market's overreacted again with the Trump. They're thinking World War III is about to. It's not. They're not thinking that, but they so much uncertainty happening. Let's see what's happening. Look how the order book. The buyers are completely dominating the shit out of the sellers. That's why you have the positive cumulative delta, and they're chewing through the order book right now. So for now, let's see how it happens. But a lot of the sea of orange. That's a lot of sellers. There's a heavy wall where above these highs right here. The sellers are trying to step in because if you go on a 15-minute chart, this is a range. Okay, this is at a head and shoulders on top of a range. All right, so sellers who are short now and they're playing this head and shoulders, they're protecting this level, and you can see this. You have a lot of support on the. You can see on the order book, but the sea of sellers trying to protect this level is enormous. Okay, why? Well, because they know once this pops, once we take out the this high, very likely we're gonna keep running into the gap close. Okay, plus it's the first. Well, it's first 3 minutes of market open. You have all the orders that were given to the brokers, to the liquidity providers, to the banks, to the schmanks, they're all getting executed right now, okay? They're getting executed. Buy this stock, sell that stock, okay? So all of this nonsense is getting executed right now that were put in over the weekend, all right? So the order book needs to chew through all those orders before we establish the direction one way or another. Okay, so first 5 minutes is usually when you should chill, and you can see right now on the you see how the sea of sellers that were protecting this huge level right here. Right, we popped, we touched it, and then the sellers stepped in. And we are, the sellers are slowly overtaking the buyers. We were very positive, and the sellers. You see, the book is there's a huge volume of sell orders stepping in and being executed into that rally. So will it persist? Nobody knows. But right now, like I said, it's best to stay out for 5-10 minutes of the open before you rock and roll further. Well, before you establish a trend or a legitimate move, Okay, so for first 5 minutes is usually on, again, on the cash market open is a no go for you. All right. Let's see what somebody asked for Bitcoin earlier. I think I explained it already. Yeah. So right. So we are doing the range. Obviously, if you haven't bought it here, and we were past the ATR, your usual. So this was a very good area to buy. You can still buy and target these highs, because if NASDAQ is going to run, Bitcoin is going to run too. So you buy 95, you sell off 105. You could do that easy with your stop loss below this low, or better yet, this low. So the risk to reward is still there. Okay. It's trying. It's trying a little bit. So as you can see, we started making higher. We're trying to bounce. So we were making a series of lower highs and lower lows, which is the definition of the downtrend. Very systematic sell-off, meaning institutional players. Somebody big gets stopped out here. That's why you have this run, and then a reversal, because now the sellers are exhausted and buyers are stepping in. So buyers are stepping in. You have this exhaustion move, all right, with a spike down and reversal. Well, how do we see a reversal trying to happen? Well, we're starting to print what? High. This was the low. This we put in a high, and now we put in a lower, a higher low, a higher high, a higher low, a higher high. So a short term, a very short term, uptrend is trying to establish itself. So it might take a while before this. Okay, but it's there. It's there for now. Okay, so we are making for the last 12 hours. We've been trying to do a small higher high, higher lows. Okay, so it's bullish off of the support zone. Not bad. You could play to the long side here, but do watch the NASDAQ. If NASDAQ is gonna keep on fucking tanking, watch out Bitcoin again. With Bitcoin right now, I would be trading very cautiously on the short term. Very cool. Oh, by the way, we do all-time highs for cash market gold. Boom. Hello. Hello, all-time highs again. Let's see how the price develops around the all-time highs now. On the 15-minute time frame, if we start seeing some kind of rollovers, maybe we'll entertain that idea. But for now, nothing to do here. Like I said, either breakout, which we just have, a little upwards, then a little follow through, retest, and then a bounce up is a continuation. You can put your stop like literally below the retest and ride it up. Or let's wait for the reversal signs. Right now, there is nothing. Again, you have to sit on your hands. This is not a casino where every minute you have an opportunity to make money. No, it's bullshit. This is why most people lose money, because they think that just markets are there, you can make money. It's just buy or sell, and it's the easiest, hardest way to make money. I've been saying it for everybody. This is literally the easiest, hardest way to make money, because it looks very easy. You just buy or sell and blah blah blah. And then you find out real fast that how difficult it is to actually do it in reality on real money. Okay, so our NASDAQ trade is doing well. It's pumping. And that's it. I honestly think that I'm gonna wait for this. This is my Monday trade. I'm gonna wait for this NASDAQ to fill the gap, and I'm gonna fuck off into the sunset for the. I'm pretty much done for the day. I'll just leave this fucking trade on, and that's it. That was my morning analysis, and you don't need, that's how it is. You don't need to overdo it, overthink it, over anything, right? So dollar index obviously has a huge gap as well, so we can roll over. By the way, dollar, I should mention dollar, because dollar was on a tear. Dollar daily. So all these euro dollar with the gap down, probably going to close this gap down, by the way. because Trump announced tariffs are coming for Europe. Obviously, Europe gapped down. Pound, as you can see, already closed its gap, or about to close the gap, right? Almost there. That's what I'm trying to play with NASDAQ. Euro, actually, quite possibly, I don't think this gap is going to stay here for very rarely they don't get close, very rarely. So might not be today. Like I said, it might dip because everybody knows the gap play. Market makers know that too, so they might take it down before they take it back up. Okay, so you have to watch out for that. So if you're playing this type of game, play with small sizes and wide stop losses. Okay, is my and wait for confirmations. By confirmations, I mean candle close below certain levels. So you just, it doesn't just wick into the level and then it reverses on you, and you're like, oh my God, it's the broker hunting my stops. Nobody's hunting your $3 stops. Okay. All right. Volume on what is it? I don't remember it. It's like 7 trillion. It's $3 trillion a day. It's something ridiculous in forex volume. And you think your $100,000 or $1,000,000 is going to be, or $50 million is going to be, something. No, it's a piss in the wind in terms of forex volume. Okay. So nobody's hunting your stops. It's banks playing against banks, playing against huge institutional players, hedge funds, et cetera, et cetera. So that's their game. You're just there along for the ride, okay? Just pick the right winning side and you'll make money. Dixie is basically, it's a very dollar index. Dixie is an old it's an old index that has been established decade 45 50 years, I don't remember, in the 60s maybe. And it's very heavily skewed towards euro, meaning Europe. So it's like 60% of it is euro dollar, like 30% to 20% pound, like 5-10% the dollar yen, and dollar Swiss, and some other garbage in there, and that's it. So it's basically a reverse of euro. So it doesn't really matter. You just trade euro, and that's it. So with dollar, so dollar will be in demand still. So for now at least. So as you can see, as we are imposing more and more headache for everybody, we are essentially creating a situation where dollars will be harder to come by. So that's why you'll have for international play. So dollar is becoming more in demand for now, and because we're imposing tariffs on Europe, their economies will suffer. If their economies will suffer, their currency will suffer. Okay, so that's kind of the thought behind the currencies right now. So all the euro, yens, and all the risk currencies obviously are selling off. Dollar CAD was through the roof, opened with a gap. It's been on a tear for I mean, it's ridiculous. I remember when it was in parity, which was that shows my age. I remember all this, and prior to this too, and now it's at $1.50. By the way, took out huge levels, huge, or as they say in America now, huge levels. All right, here. So let's see if we have a close on this monthly, weekly, on a weekly right now. If we don't have a close, right? So if we have a close above, it has a very big chance of rallying. But even on a weekly, you see we took out these huge resistances. If we have rally a little bit, then a retest, then continuation, that's another play. Retest, continuation, over and over and over again. All right. So let's see what happens. Obviously, Canada is in deep doo-doo. Same thing with Mexican dollar. Posing tariffs on Mexico. Their economy is going to go to shit, so their currency is going to go to shit. So that's why U.S. Mexican peso is U.S. dollar is rallying against Mexican peso. These are the plays. Yeah, well, Canadian news is always fucking negative. It's with Trudeau in power, there's nothing positive going on over there. So, kind of like Europe. Europe is dog shit. You know, it's an embarrassment of a continent at this point. All their political leaders are just driving it straight to the fucking ground. All right. So and the winners are China and United States. So. And now United States is being harder on China, so United States has the biggest schlong. That's a very technical term at this point in that game. Anyway, NASDAQ is still oscillating back and forth, back and forth. Yeah, so we had a pop. It's still directionless, to be quite honest. It's still, you see now these sellers are stepping in heavy. So we'll see what happens. We're back at we're still in profit, but I'm gonna just leave it alone. Like I said, I hope this kind of helps. As always, I'm gonna have rewatch this. Remember what I'm giving you little tidbits every day for you to see how it's done. And if it works for you, if it resonates with you, just try to incorporate it into your trading and see and test it. And after months and months of making adjustments to your trading style, maybe incorporating some of the things I'm mentioning on these lives, it starts working for you. You become profitable. So come join us at Funding Futures or fundingtraders.com. All right, ladies and gentlemen, thank you so much. Gap fill is always possible. Yes, the gap is the play. They act like magnets. I've explained on the last couple of weeks. Been ad nauseum at that. Yes, your dollar will fill the gap, but I don't know if it's going to happen today or it's going to happen in a couple of days, because they might take it down, like I explained to you. The gap fills the market. Everybody knows about that. The market makers know that everybody wants to buy the. Exactly like last week, we bought the gap for the gap fill, right? So everybody's trying to buy for the gap fill, but since they saw that last week it worked out, a lot of people might step in and keep doing that, and the market makers might take it down, take their stop losses, which are below this point here, and then do the gap close. Whether it's NASDAQ or Euro, it doesn't matter. So that's what you have to watch out for. So if you're going to see prices close below this level, wait for a candle to close if you want to take a stop loss. All right. All right. Or just, I'm just oscillating for a small profit for me. In any case, I'll be here tomorrow at 9 a.m. Hope it helps. Join us at Discord. Join us at fundingfutures.com. And we'll do it again tomorrow. All right. Hope it helps. Enjoy, guys.